Good day everyone. Today we'll be talking about sinking funds. So sinking funds are like funds we open for things like vehicle, machinery or depreciating assets in general. So there are funds that we use to replace a certain equipment after a certain amount of time. So let's say you own a delivery company and you have a vehicle, a delivery van. And then in 5 years time, you want to replace that delivery van. So a sinking fund is what you will use so that you'll be able to calculate that after the 5 years, how much must I have so that I can afford to replace this delivery van with a new one. So how do you generally answer those questions? Firstly, you have to calculate the scrap value of the equipment or the delivery vehicle you currently have right now. Scrap value and book value is the same thing. So if the delivery van depreciate with compound interest, you use this formula. If it depreciates with simple interest, you use this formula. And then you'll also have to calculate the price of a new equipment. So how much will a new delivery van cost you after that 5 years? So if the car appreciates with compound interest, you use this one. If it appreciates with simple interest, you use this formula. And then for you to be able to calculate that during this 5-year period, how much should I be depositing every month into this fund? You use this future value annuity formula, where the variables still stands for the same thing as the previous video to this one. So now let's do an example so that we can see how we apply this equation when we are calculating sinking funds. The first question says, a company buys a van for 265,000 rands. It depreciates at reducing balance of 17% per annum. The van will be replaced in 5 years' time and the new van appreciates at 12% per annum. The first question is, calculate the book value of the van in 5 years' time. So what do they want by book value? They want the scrap value. So you're going to use which formula? The compound formula one. So your A is P into 1 minus I to the power N. So your P is 265,000 rands. 1 minus your interest. It's 17%, but please write it here in decimal form. Percent divided by, you get it per annual, so you get it only once per year, so we'll say 1 all over to the power 5 is 5 years. So here you'll get an amount of 104,384 rands 58 cents. What does this mean? It means that after 5 years, the van you bought for 265,000 rand, it will be worth 104,384 rands. And then the follow-up question says, determine the required amount in the fund for the company to afford a new van in 5 years' time. So how much should be in the fund in 5 years' time so that we can afford a new van? So for you to do this, you firstly have to calculate the price of new equipment, which means you have to calculate the price that the new van will cost in 5 years' time. So how do you do it? You use this compound appreciation formula. So you'll have your P into 1 plus I to the N. Your P, your principal amount, is the amount it costs right now, which is the 265,000 rands. The interest, they said it appreciates at 12% annually. The cost of new equipment, they said it appreciates annually at 12%. So you'll have your interest here in the decimal form, and then since it's annually, means that you only get it once, so it's over 1. And then the number of years is 5 years. So you'll get that the cost of a new truck or the new van 5 years later will be 467,020 rands 55 cents. This will be the cost of the new van 5 years later. But then for us to find the amount of money we need in our fund for us to be able to afford a new car, it's simply, let me say, amount needed is going to be what? It's going to be the price of the new equipment minus what? Your scrap value or your book value. So the price of the new equipment 5 years later is going to be 467,020 rand 55 cents minus the book value or the scrap value. We calculated already. I wrote it here. It's the one we calculated in the previous question. So it's 104,384 rands 58 cents. So the amount you get there, it will be 362,635 rands 97 cents. So this is the amount we need in the fund 5 years later for us to afford a new van, because we are obviously going to sell the old value. We are obviously going to sell the old van at scrap or book value, whatever you want to call it, and then the new one will cost us this. So the difference between the two is the amount that we have to have in the bank to afford a new van. So let's look at the other question. The follow-up question says, calculate the monthly installment needed so that the fund can reach this amount and we can be able to buy a new van if the fund earns 11% interest per annum compounded monthly. So what do they mean? They mean that for us to have this amount that we calculated in the previous question in our fund and we are earning this interest, how much do we have to pay monthly so that we reach this amount? So for this one, you use your future value annuity formula. Yeah, but then remember, we are looking for what? Monthly installment. So we are looking for our X. So you have to make your X the subject of the formula. Here it is. But then remember, your F is not the price of a new van 5 years later. No, your F is the amount you have to have in your fund so that you can buy the new van 5 years later. So your F is going to be this amount we calculated in the previous question. And then remember, in the previous video to this one, I told you that whenever you are using this equation, your I and your N are linked. So if you don't understand what I mean, please go and watch that previous video. So your I, they said it's what? It's 11%, so in decimal form is 0.11. But they said it's per annum compounded monthly. So we divide by 12 because there are 12 months in a year. And then here, 1 plus your interest, same thing, 12. But then remember that in this formula, your N and your I are linked. So your N is going to be 5 years, but times 12, because in that 5 years, we receive it 12 times per year. Then minus 1. And then you'll get that you have to pay 4,560 rands 42 cents. So what does this answer mean? This answer simply means that we have to pay 4,560 rands 42 cents every month for 5 years, so that at the end we can be able to have this amount in our fund and be able to afford a new van. So that's all in today. So if you appreciate the content, please like, comment, subscribe and share. Thank you.